Good afternoon, everybody. I'm just gonna give another 2 minutes just to wait for everyone to pack their cars, hang their coats, and join us for the webinar. So give us another 2 minutes before we can start the webinar. All the speakers are ready. We are all ready, just waiting for everybody to get their seats and get comfortable. Grab your coffees and teas. Good afternoon, everybody. We're waiting for the rest of the people to grab their seats so we can start when everybody is well in and settled. Give us another couple of minutes and we will start shortly.
How to do it? Huh? Yeah.
And you can use the Chrome.
Chrome.
Which one are you?
I use Safari. Yep. Yeah, it says you wanted just a free page.
Yeah, this system.
Hello, everyone, and welcome to Africa's Digital Baraza. This is brought to you by GBS Africa, ISFIN, and Frontier Africa Report. A baraza is Swahili for gathering, and in traditional settings, barazas were only held by elders when communities were threatened or were challenged or faced with uncertainty. COVID-19 has without a doubt challenged Africa's capacity. It has challenged our leadership and at the same time exposed some of our weaker points. Today, we're going to look at the implications of COVID-19 on Africa's economy. And I'm delighted to be joined by incredible speakers who I'm very grateful to. And to take us through the program, allow me to invite Mr. Boasen Omopaye. Mr. Boasen is a leading voice on Africa's reportage. He champions evidence-based reportage on Africa matters, particularly finance and business. Most of you might probably know him from Nigeria's Channel TV, and if not, you can look him out at the new venture, which is the Frontier Africa Report. Mr. Boasen, please take on the program.
Thank you, everyone. I hope we're all keeping safe and looking good this Thursday, the final day of April. A very good time to be here with everyone. Thank you, our participants, and thank you, our panelists, everyone who's made time to be on this very important live webinar. Of course, the focus is on COVID-19 on African economy, the markets, policies, and regulatory response. We've got participants all lined up across sectors from finance to fast-moving consumer goods. We also have folks from policymakers and those who are in professional services, agribusiness, and legal. So it's all a very wide field for folks who are joining this live webinar from around the world. We thank you, everyone. Let me quickly introduce our panelists who have made good time to be here. Thank you all. Let me start from Papa Ndiaye, who is Division Chief, Regional Studies Division at the African Department of the IMF. Thank you, Papa Ndiaye, for coming through. Yomi Oresawo, who is a CEO at Advantac Advisory Services. Thank you. It's good to have you here. Atef Al-Shabrawi, it's good to have you, Doctor, who is economic advisor at the World Bank. We thank you for your time. Ali Khan Sacho is joining us. He's a CEO and founder of Rich Management Advisories based in Nairobi, Kenya. Thank you very much. Ali Seger, another Ali. We got two Alis here today. The second Ali is an expert in governance, risk management, and compliance. He's joining us from Dubai for this conversation. And last but not the least, Gaimi Noniane, formerly with the EcoBank Group in London. She's an economic consultant at K Solutions. Thank you, ladies and gentlemen. We appreciate your time.
Thank you, Watson. It's good to be here.
Thank you. Thank you. So let's get the webinar started. Of course, for a few housekeeping reminders, each speaker, our panelists, have 5 minutes. We'll make the best use of that for about 30 minutes. Then we'll take some interactions with the panelists to speak to their presentations for a couple of minutes, about 20 minutes. Then, of course, we'll open the floor to other participants. Right now, we have more than 111 participants already joining this live webinar around the world. We're expecting more to join within the hour and a half. If anyone has any questions, you can see the top right corner of your screen. You can just put in your question in there, and we will attend to that as well. Then we have about 3 poll questions to get the conversation started. So very quickly, we're going to go straight to the first poll. And the question is simple 2 options. You can see that on the series screen. Have African governments done enough to cushion their economies against COVID-19 pandemic? You can select yes or no on your TV screen. I think I'm doing my vote right now. There's the poll. It's now open. Everyone should please get to answer these poll questions. A quick poll, and just about 20 seconds, then we will move on to listen to the first presentation on this live webinar. Thank you, everyone. Poll in progress for attendees only. Have African, okay, we have more yes votes than no. No, oh, I beg your pardon. No, it looks like it's having, see, there are a lot of green, and I'm confusing the yes for the bears and the bulls for the no. It's a reverse in this case. The no is having the fact that African governments have not done enough to cushion their economies against COVID-19 pandemic. I think we will discuss this as we move on, because when we say African governments, have they done enough? The pandemic is just opening, as it were. So do we have enough ammunition to deal with it? But let's give the floor to Papa Ndiaye from the African Department of the IMF to give us his presentation for 5 minutes. Dr. Mr. Ndiaye, you have 5 minutes. Please go ahead.
Thank you, Bosan. Thanks for having me. Good afternoon, everybody. I'm very honored to be speaking on the impact of the COVID-19 on Sub-Saharan Africa. My focus will be really on Sub-Saharan Africa, which is the region that I cover. We have published recently our regional economic outlook that gives in-depth analysis of how this crisis is impacting the region. But let me just give you a broad overview of our findings and our assessment, and what our assessment of the impact of the crisis, and the policy recommendation that we have for countries to deal with it. As you know, all of you know, the region has not been spared by the crisis. As of yesterday, there were about 19,000 cases in the region, with most, the highest number of cases in South Africa, Cameroon, and countries like Cote d'Ivoire. So this crisis is unprecedented, and it threatens to reverse the region's progress in the past few years. If you look at everything that has happened over the past 20 years in the region in terms of improving social, economic indicators, whether it's education attainment, health, the lifespan, the reduction in poverty. So all that is now under threat because of this pandemic. So how do we see things evolve this year? We are projecting growth to decline by 1.6% in 2020. And if you put that in per capita terms, it's about a 4% decline. And this, we haven't seen anything like this since 1970. And we cannot even rule out the possibility that the impact of the crisis would be larger than what we currently project, because there's a lot of uncertainty on, for example, the duration of the pandemic, the volatility that we see in current markets, and how long, for example, commodity prices will stay low. So there's a lot of uncertainty in there. And even if our projections were turn out to be correct, one needs to realize that we are talking about a downward revision in our projection of about 5 percentage points. And in terms of, just let me put it in terms of income. We are talking about a loss of about 200 billion at the region level, like relative to where we were expecting output to be back just 6 months ago. So this crisis will have a big impact on the region, and there are various channels through which this is manifesting. The crisis is manifesting itself and impacting the region. One is through the domestic and necessary containment and measures that countries have taken to limit the spread of the virus. So, and these have been swift and decisive measures that country authorities have taken. So the poll that you had in saying that countries have not done enough is a bit it's a bit surprising. I mean, the countries have moved very quickly to try to stem and reduce the spread of the virus, and we are seeing some benefits to from those measures, in the sense that the pace of contagion has slowed quite a bit since April, as countries tighten these containment measures. And this is about closing borders, shutting businesses, requiring people to stay at home, and these are difficult measures that are going to reduce demand, disrupt production lines and supply channels, and will then have a negative impact economically on the region. And let's not forget that the bulk of the households in the region depend on daily day-to-day work, and they have to go out every day to earn their income, and that will essentially have a big impact on them. The second channel through which the crisis will impact the region is through just plummeting global demand. You have seen the very bad economic figures coming out of Europe, the United States in particular, and China, and those are going to impact the region a lot, essentially through less demand for its exports. Tighter financial conditions will have an impact on our frontier economies, the like of Nigeria, Ghana, Kenya, all these countries that also had planned to tap global markets to finance development projects and so on, will be hit. Not things like remittances will also likely decline. And the final channel through which this crisis is impacting the region is through commodities. we have seen incredibly large decline in oil prices, for example, that will hit a lot the region's oil exporters. So this is just in a nutshell the channels through which the region is going to be to be impacted, and therefore there is a need for countries to step in and to take decisive measures to limit both the humanitarian cost, but also the economic cost. So the way we see it is the immediate priority is what essentially countries have been doing is to do whatever it takes to save lives, and that, you know, if that requires ramping up health spending, that will need to be done irrespective of the fiscal space concern that countries may have. Fiscal policy will also need to play a leading role in mitigating the impact of the crisis. For example, you know, through targeted cash transfers, we have seen a few countries do that, whether it's cash or in-kind transfers, to help people for which livelihoods have been upended by the containment and mitigation measures. So where feasible, temporary or support will also need to be given to small and medium-sized enterprises, and from our perspective, we see that it is only when the health crisis and the brunt of the economic crisis has been put aside that countries will then need to turn to trying to bring fiscal position to a more sustainable path. It is critical, though, that these countries, for these countries, the countries in the region response to be effective, it is critical that they get the support from the international community, and this you have seen several initiatives in the past few months that go in this direction. For example, in terms of what we are doing for the fund, we have received just for the region, the Sub-Saharan Africa alone, over 38 requests for assistance. We have up to 11 billion in terms of money. We are set to provide up to 11 billion to those countries that need it. We have already disbursed money for a few of them. There is also immediate relief that's being provided through what we call our Catastrophe Containment and Relief Trust, which essentially frees resources for the poorest countries, and these are resources for health and social spending. We have 19 countries in the region that will benefit from this relief. We support the G20 initiative to also suspend official bilateral debt repayment for the poorest countries through 2020. And finally, we also have put up a short-term liquidity line that is available for countries that need to strengthen their economic stability and confidence. So this is overall what I wanted to say. Just wanted to conclude by saying that, you know, this is a region that has tremendous resilience and tremendous strength, and I'm confident that we will get out of it and manage to overcome this challenge. Thank you.
Oh, thank you so much, Papandiaye of the IMF African Department. We appreciate your presentation. I think we should just move on quickly to listen to Ali Khan Sachoo, who is the founder and CEO at Rich Management Advisory, based in Nairobi, Kenya. Ali Khan.
Yes, thank you. Thank you, Bosun, for the introduction. And thank you to Agnes for the invitation today. And it's a pleasure to be speaking with all of you today. Bosun, have you got the presentation? Is that possible? So just to start with a perspective, I think what I would describe the current position as being as follows. The global economy has been hit by an insidious, literally invisible circuit breaker. And we've seen that in the economic GDP numbers out of the US, out of Europe. And then I would say the virus is not correlated to endogenous market dynamics, but remains an exogenous uncertainty that remains unresolved. So I think, like Ms. Gopinath said in her presentation at the IMF, the first priority is actually a health priority, and the economic recovery can only come after the viral uncertainty is resolved. And it doesn't mean resolving it only in Africa. It actually means a resolution globally, because that is so important to the demand side of the equation for us. Frankly, I see the global economy is entering a depression. I just don't see how we're going to avoid that at the moment. We've seen plenty of money thrown at the problem, but I'm just skeptical that that is going to resolve the issue. If we look at the virus, I just want to just briefly touch on this. There's been quite a lot of optimism of late. Financial Times had an article, I think, with David Pilling yesterday, which was kind of patting everybody on the back and saying we've skipped a bullet here. But if I look at the data points and I consider what I'm seeing, if you look at the numbers now, the numbers are trending higher. We have more than 1,000 cases a day. Our testing, frankly, is very low. We are seeing what I would call clusters start to develop, whether it's anecdotal in Kano, Djibouti, in various other places. And I think it's way too early to say that Africa is going to skip this bullet. So this is a trend graph. You can see the numbers are growing. You can see how the daily numbers now are consistently over 1,000. What I do know is that this virus is exponential, it's non-linear, and this is one of the most difficult things people have grasping, is the non-linearity of a virus. The advantage we have with this is we've got a very young population, an average of 19 years old, and this is working in our favor. And also, I tend to think that we have been more exposed to viral environments versus very sanitized environments in the Western economies, and therefore this is advantaging us. And you're seeing that also, that North Africa, which is an older demographic, is suffering more visibly than we are in the center and in the south. But at this point in time, I think it's way too early to say that that we're going to miss this tsunami. And I think that we've got to be very, very wary about how this is going to affect us, given the nature of our health systems and the fact that we could be overwhelmed, in the space of a few days, I'm afraid. Now, it was good to follow on from the IMF, and I just want to say a couple of things. This was the IMF projection: Ethiopia positive 3 point something, Uganda close to 4, Senegal above 2, and obviously the more commodity focused countries in negative territory. I come from a trading background. I cannot see a single African country posting positive GDP growth this year across that entire list. And the reason is pretty simple. If you look at things like, you look at all our income streams, remittances, we've got unemployment levels now of 16% in the US. We're going to see worse numbers. We've got a similar situation happening in Europe. The Gulf, we've got an imploded oil price. I think it's going to be a miracle if our remittances are within 25% of what they were full year last year. If you look at tourism is dead for the whole year, and I think that's a fact. If you look at if you look at the commodity-based currencies, you know, anybody who's thinking that we're going to get a fast recovery, V-shaped recovery in the oil price, for example, you know, we've got ships parked at sea. We're not going back to 100 million barrels per day world, which we were in for the foreseeable future. Even if all our politicians said we want to switch the economy back on, it's highly unlikely that's going to happen. So I think we're facing, in my view, a really extraordinary shock. And I think it's very difficult for me to see GDP in positive territory anywhere at the moment across the continent. And therefore, I think, you know, we have to be practical that this really is quite an unprecedented situation.
I think, Ali, you've made a very,
yes.
You've made a very important presentation, and we just want to try and quickly run through your speakers. Once all of you are done, the panelists, then we'll come back to you, each and every one of you, to freshen up some of your ideas with about another 3 minutes each. So Ali, if you permit me, yep. You can speak to the rest of this presentation, graphics, informative ones you put together. But let's take a quickly switch on and ask Gaimin Noyani, sitting in London, who is an economic consultant at K Solutions, to weigh in on this. What are your thoughts for about 5 minutes on where we are at the moment?
Well, I agree with the previous, thanks for having me, by the way. I agree with the previous speakers about the downturn in the global economy, and of course, specifically in Africa. I mean, it's a frontier market. It's highly prone to shocks from the global economy. And as we've just seen by Papa and the other speaker, growth in these markets will definitely take a dive. I think one way to look at this is through the leading indicator, the PMI. The PMI is now showing that in most of these markets in Africa, the manufacturing is actually on a downturn. I mean, Ghana just recently published its PMI for March, which was its worst so far. It's an all-time low of 41, which is well below the 50 benchmark points, which suggests that manufacturing is contracting in these markets. And manufacturing plays a very big role in these economies. I mean, you'd be surprised because, I mean, in Africa, growth relies a lot on consumer spending, and manufacturing is a key sector in that market. So I think that as a result of this, we're likely to see further downturns in these markets. The IMF, I borrowed this from the IMF recently, and it shows that the Francophone West Africa are likely to be more resilient, but as the previous speaker just said, these are all speculations because it's really hard to tell. There's a lot of uncertainty in the global economy, so it's hard to tell. And if production is already dwindling, and especially in the cities, the urban areas, which accounts for majority of government revenue and government activity. Take for instance Nigeria. In Nigeria, in Lagos, and as well as in Abuja, economic activity accounts for about 45% of government revenue and about 50% of GDP. So now that they're experiencing all these confinement measures, it's going to have a very significant negative impact on government revenue and on GDP as a whole. And so it's not surprising that the IMF is predicting that Nigeria is going to contract this year. And it could be even more than the 3.4% that we're seeing here. And if you take Ghana as well, Kumasi, Accra, if you combine those two cities, economic activity and government revenue accounts for majority of tax collection. And so we're likely to see a lot of negative implications in the area in the real sector in these economies. I believe that other sectors such as trade will also be affected. Logistics, transport will be affected severely, and these account for a majority of the entire national account statistics in these markets. Hospitality is another thing. In Senegal, in Cote d'Ivoire, in the Gambia, tourism is already down in those markets. And so we're likely to see further extensions. And if I can just dive into the financial markets, currency, as a result of the uncertainty in the global economy, the increased risk aversion towards EM markets, frontier markets, we've seen a depreciation in most of the currencies and increased volatility. The CBN, as well as the Bank of Ghana and the regional central bank of Yomwa, are all trying to provide credit relief measures to help to support households, to support businesses. But I still believe that currencies will be on a downturn. And in terms of the fixed income space, we're already seeing spreads in majority of the frontier market sovereigns, with the worst being, as we can see from the chart, with the worst being Angola, Zambia, Gabon, those countries that had very, very weak fundamentals. And I expect the spreads to continue to widen in these markets, which shows increased risk aversion, and any additional financing will be very expensive for these markets. So as much as we're anticipating a U-turn, as we get support from the central banks, from the treasuries, and some easing of the restrictions, I think we should also not discount an L-shaped recovery. Thank you.
Oh, very, very great comments and presentation. Thank you so much, Gami Nayani. Let's listen to Ali. Ali Seder, who is an expert in governance, risk management, and compliance. In terms of what you've seen here, what are your thoughts? Give us your opening presentation for 5 minutes. Thank you.
Yes, thank you very much. So can we just display the presentation now?
Yes, yeah, we're just going to pull that up as you speak. So you just speak to your prepared material. Please go ahead, Ali.
Perfect. So thank you very much for the meeting. What I want to say is that yes, next slide, please. Next one. The next one. Just one after. One after.
And the next one.
Next one.
And the next one.
Yes, this one. So I will just yes, I will just no, not this one. Next one.
Please go, Ali. Just go ahead. We'll try and so that.
Just to let you know, so the presentation will be about North Africa. So North Africa is a region, a sub-region in Africa. What you need to know about this region, this is 200 million people. So out of these 200 million people, the COVID-19 has done roughly 1,000 deaths. So 1,000 people die from COVID-19. So it's one of the most, we can say, targeted region in Africa, but it's not a big figure. So what is the main impact of the COVID-19 is mostly on the economy. It's not really on the health issue, but it's really on the economy. So if we can go just a little bit later on. Next slide. Next. Next. Yes, so this one. So just to let you know also that North Africa, for all countries, have done quite a lockdown. So it's not really a total lockdown. It's mostly, we can say, a night curfew, and some activity have been stopped. So what happened in North Africa, North Africa is really, we can say, have a big weaknesses because they have all their economy based on some sectors. So first of all, the politics is not really stable in North Africa. So you have Libya, of course, with the civil war. You have a big contestation in Algeria, and Egypt, Morocco, and Tunisia are not really better than that. For oil and gas, so the two countries we can say that have big risk on oil and gas are Algeria and Libya. So Algeria, 95% of the exports are based on oil and gas. So it means that with the current price of oil and gas, it's really tough for Algerian government to finance reforms, in fact. Same thing for Libya. For Egypt, it's a little bit different. It's 27%, but it's still a big issue. So agriculture, also, we have some issue in North Africa. So you have droughts in Algeria and Morocco, and you have some water issue, and also it creates some import issue. You heard recently Russia has stopped the wheat exports. So it means for Egypt and for Algeria and for Morocco, it can be a big food security issue. You have also an impact on the international trade, especially for Egypt, because as you know, the Suez Canal revenue represents roughly $6 billion of revenue for Egypt. So with a contraction or a decrease of the international trade, the Canal Suez revenue will decrease a lot. After, you have also the remittances from the diaspora. So the main country we can say impacted by this will be Egypt and Morocco, because you have a big diaspora of Egyptian, especially in the Gulf countries, and in Morocco, especially in Europe, that even this diaspora will face some issue in terms of unemployment and all this. And the last point will be on tourism. So tourism for Egypt, Morocco, and Tunisia, it will be a real challenge to face it for 2020 and perhaps 2021. Next slide. Next one, sorry. So just to let you know also that all the countries have done some policy intervention, mostly on fiscal spending and monetary stuff. So for example, Algeria has announced that they will reduce of 30% the government spending. They also say that they will decrease the import bill. They don't know how they will do it, but this is what they announced. So this is the announcement. For Egypt, this is what they announced. So you can see that. So you have some financial, so monetary policy and fiscal spending. So this is mostly to sustain the consumption and to sustain also the production. So for example, for the production, they decrease the energy price for producer. Next one. Next slide, sorry. Yes, so for Libya, they announced something, but nothing has been done. They announced that they will decrease, they will do a 20% pay cut on government employees, and there is a package on health system of $50 million. Next one, for Morocco. Next slide, sorry. Yes, for Morocco, sorry, just before. So for Morocco, they have done the same thing. So it means for Morocco, they have also done a monetary policy and a fiscal spending and balance of payment also. So they want to sustain mostly the SMEs, and so for Morocco is mostly the SMEs and some support for the consumption also. And the last one is Tunisia. Next slide. Next slide. Yes, the last one is for Tunisia. So Tunisia has put $850 million to fight against the effect of coronavirus, and they add the European Union support of $250 million. So all these governments have tried their best, we can say, to maintain and to curb the immediate effect or the short-term effect of the COVID-19. So this is first to ensure the food security, that the unemployment don't go too high, especially for SMEs, and to save some companies from bankruptcy with some kind of free loans, in fact. So on the medium term, what we can say is that all this policy deepens the tax deficits. So it artificially also put afloat some companies, and it's not really sustainable. They have, as of today, some currency reserves, but it will not last long, in fact. It will not last 1, 2, or 3 years. So it really, the currency reserve deplete really, really fast. And on the long term, what should be done, this is really to think about the economic model. As of today, all these North African countries have mostly, we can say, a rentier or annuity model. They don't really have productive activity like manufacturing and all this kind of stuff. Next slide. Yes, after there is also some question on the regulation, because all this COVID-19 shows us that the regulation in all these countries is not adapted to face such pandemic. So you have the labor law, first of all. The labor law in most of these countries, they are civil laws countries, they don't take care of, we can say, flexibility and staff protection. So these two issues will be really key in the coming year, and I think we will see a lot of changes in flexibility and protection for labor staff. After, you have also the digitalization. So on payment and banking and on government service, because people have seen that things are possible, because for years this government was talking about digitalization of government service, and once this pandemic happened, things have moved really fast, in fact. So for the 5 last years, they were talking about digitalization, but in few weeks or months, everything was possible. After, you have also on the investment law. So we will have certainly some changes on the investment law, on the foreign capital, how to, we can say, to protect the foreign capital, on the currency control, because all these countries have a strict currency control, on land, so land property, and on free zones. And at the end also, there will be some more question on force majeure case, because this pandemic shows us that the force majeure cases is a big issue. In civil law countries, it's even more complicated. It's not like a common law where you have, we can say, a force majeure definition or force majeure principle. Here, it will be a case-by-case basis. So it will be really, really difficult to show that it is a force majeure. After, you have also the insolvency law. So in Egypt, Morocco, and Tunisia, they have quite good law. In Algeria, to let you know, the last law on insolvency, it was in 1975. So roughly more than 40 years old. And after, the last question for all this company, this is what are your contractual obligation and your ethical obligation for your staff and the country. And to finish, the last slide. Next slide. Yes. So the future challenges will be, for me, these 4 issues. It will be, first of all, on integration. So how to integrate. The sub-regional integration is not working in North Africa. North Africa countries don't trade with each other. They all, each one trade mostly with Europe. They don't do any trade with each other. There is a good example of sub-regional integration is Tunisia for tourism. So most of the tourists in Tunisia are Algerians and Libyans. So after, also you have an issue on regional integration, on more, we can say, a continental approach. How to do it, because people are talking a lot, yes, we need an African integration and all this, but how to do it? And also this challenge, this pandemic shows us that there is a big issue on centralization of all decisions in one hand, in fact, mostly in the capital, because Algeria, Egypt, Morocco are big countries, and sometimes when you do a full lockdown, it doesn't make sense to do a full lockdown for a whole country. So how to have a more, we can say, granular approach on this kind of pandemic. After, the second thing, it will be on the modernization. So how to make it more modern with digitalization. Financial inclusion is also an issue. So in most of the country, financial inclusion is an issue. and after also how to improve the local production and the local consumption, because as of today, all these countries just do it for foreigners. So how to do it locally. And the third point, it will be investment, how to attract investment. And the last point, it will be how to develop the capacity.
Ali, thank you so much. Ali Seger, we appreciate your very robust presentation for the North African region. I think we should just listen to Dr. Atef Al-Shabri, who is an economic advisor at the World Bank, to bring us another perspective from the Washington side. We'll listen to Papandiaye first from the IMF. Dr. Atef, let's listen to you for 5 minutes. Thank you. Dr. Atef, I think you need to unmute yourself. If you look at the audio button, perhaps at the top right hand of your screen, I'm sure you see the audio button. You sure you're not muted?
Yeah, you hear me now?
Yes, please go ahead, Dr. Atef. Thank you very much.
Yeah, I'm sorry. Yeah, I'm sorry. I'm speaking from Egypt. I'm not from Washington, D.C. I'm working as advisor for the World Bank for the Ministry of Social Solidarity. I'm very happy to be with you today. In fact, I will complete what Ali was mentioning regarding North African countries. I will take one example just to demonstrate how one single African country is facing the epidemic. Thanks to move quickly the slides. In fact, what I try to give you, I will try to give you the details of one example, how one country is facing and the measures they have been taking. Let's say that we are facing a lot of challenges, as this is the first time in our history we face that kind of lockdown, massive lockdown for something we don't see. We are not all cutting the virus, but we are all locked down. So we have that question of doubt. So we have, I try to have a small directory for or dictionary of words, which we use it today as an economist. Most of the time we don't know, we have a slow economic slowdown. We need to keep people and business alive. We need to think about debt, bankruptcy, stimulus packages. We have to slash interest rates. We have to make cash transfer, but also we have to think about job loss and informal sector. And I just mentioned one word that in the first industrial world, in fact, we have a different terminology, because as our colleague mentioned earlier, that in Africa we have massive informal sector. So we have a lot of expressions which are different than in modern and industrialized country. Please go ahead. So I will just stop in one country to show you how COVID-19 might impact the country. I talk about Egypt, and please the slide. I will just I use the title "Good Time Before COVID" because Egypt was in the line of having a wonderful results. Egypt was considered by many. In fact, investors like the best place to invest after the reform of 2016 by the IMF. We have even recently from Bloomberg, and in January 2020, we have nominated Egypt. It might be one of the among the world biggest economy in 2030, and it was even in 2018. Egypt was having the highest growth in GDP in the MENA region. To the left side, please, slide before if you can. The slide before, please. Can you move the can you move the slide backward? Yes. Yeah, just I mentioned here in the charts, we have it to the right hand. We have the growth of the domestic GDP. Please go ahead. One slide. Yeah, you have two charts here. The first one, the upside, is the total public and private implemented investment, and you can see the growth, particularly since 2018, when the government is making a massive investment, and we have the down the growth of the GDP, which is reaching plus to 5% of the growth in the GDP. I mean, the ecosystem of the startup in Egypt is nominated to be the first ecosystem for startups in Africa. We have recently one of our startup won the first 8 million 80 million investment for one round, which was a record. You know, even the growth happened are driven the unemployment rate down from 12 to 7.5. So it means that before the COVID, Egypt economy was going very well. So next slide, please. So Egypt, it might be representing a country was in the ramp of growing, and the growth rate in GDP and the employment and foreign investment. And suddenly we have this COVID. So please, the next slide. So in fact, as Mr. Ali mentioned, please, the next slide. Yeah, as our friend Ali mentioned, you know, the pressure which might be, we have a strong points like Egypt has unfortunately tremendous external debt, which is 109 billion. But some of the points we have as a strong point, like remittance. Remittance was getting a score last year, where Egypt was a third country in the world after India and I guess Filipino for the third place in the remittance. And this remittance is very risky now. We have also the tourism, who had kind of a record last year, 2018 and 19. We have the third, which is Suez Canal. I mean, all the indicators were going up last year in 2018 and 19 were kind of having a record. And those, at the same time, all the mentioned remittance, tourism, and Suez Canal are all subject of the COVID and subject of being really a pressure on the economy. We have also 20% of labor force are daily workers. About 50% of them are informal workers in the labor work. If you can figure that informal sector in Egypt is about 19%. So informal sector, people who are now without coverage, without security or in pension, and the rate of poverty, unfortunately, is about 32%. That's a point which is making very vulnerable the position of Egypt vis-a-vis or in front of this COVID impact. Please, aside after. So what's happening that the Egyptian government was trying to do quickly a kind of quick reaction. Please, aside. Please, next slide. So I'm sorry.
Okay.
Yeah. So
yeah, in 2 minutes.
Yeah, I will go quickly. So some of in fact, the loss of the Egyptian government, the Minister of Finance mentioning a few days that the government will lose about 50% of governmental revenue due to the stopping of the business. Increase of import commodities is already having a huge impact, as Egypt is one of the bigger importer for the commodity goods. And as we see, we have a small study, very recent, a few weeks back, regarding the job loss and business revenue, which is going down. I mean, one governor is in the north of Egypt. Once we have a case, they stop the factories, and the laborers are coming to protest. And the whole small town, we have a strike 2 days after, because people are refusing to stop working, you know, because they are living in day to day. So that's a dilemma. Next slide, please. So I will just jump to the slide after, which are detailing the measures which have been taken, like financial measures. This is unfortunately Mark Mero mentioning that 1 month could wipe 10 years of progress. 1 month of COVID today will wipe 10 years of progress, particularly in fighting poverty. Next slide, please. So we have a huge impact, in fact. So what government is trying to do quickly. Next slide. I guess that half of our time is to ask for the next slide. I'm sorry, I have to take an extra time for the next slide. So please, the slide after. So here I will stop to one slide, which is having the total intervention. So we have a huge, in fact, 4 pillars: the monetary and fiscal policies, which we have, next slide. which we have cuts of rate of interest. We have postponing all the payment for the taxes for the government. We have even postponed the payment for the loans, mortgage and SMEs loans for the, and despite all of this, we are now last 4 days back, the government started to talk with IMF. So I mean, supporting healthcare, paying more for the doctors, paying more for buying medical equipment and business posting. Next slide, please. So next slide. So here I try to summarize. Next slide. Sorry, next slide. Yeah, here I try to summarize that the government has a stimulus program of 100 billion US dollar, which has 4 parts. One part, slide, previous one, please. Yeah, we have 4, one monetary and fiscal. I'm sorry, I didn't mention fiscal. One boosting the business, one reinforcing the social protection, and one supporting healthcare. And for example, for the social protection, the government is adding 160,000 more case for the welfare system. They are increasing the, making a cash transfer for about 1.3 million informal labor by 500 Egyptian pound for 3 months. And this is a measure for the social protection. If you go for the boosting the business, we have about pay the 10% of due for the 1,777 businesses. They are deficitary, so the state will pay for them. We have about 1 billion for supporting the exporters, and the exporters are facing a huge problem due to the break of the global value chain. We lowered the electricity price, as our colleague Papa mentioned, that we lower the gas price. All the stimulus which might be from the state itself is done. Healthcare sector is already taking into consideration. Next slide, please. So I will stop in the future, because as we see here, our colleague mentioned that the future is not so much greedy, but I will just mentioning 2-3 points. In fact, what we have seen until now, that the epidemic down looks probable opportunity are there. I mean, most of, yeah, you would like to talk, Mr. Barson?
Yes, Dr. Atef, any other extra minute you take in will be a stimulus and you'll have to pay for it. You sure you can get the IMF to underwrite that? Okay. Okay.
No, I was just mentioning. Yeah.
60 seconds. 60 seconds.
Okay, I have nothing more to add. In fact, for the future, here we are talking about the future. We are not able to change what's going on, but we can think about how things might be changing in the current time and future. And particularly, I stop in 3 things. The first, that we have to think about entrepreneurs. Peter Drucker mentioned that problems are opportunity for entrepreneurs. So we are now in Africa think to create more and more entrepreneurial. The second, that top officials are repeating that our economy is positioned to cope. However, we have to establish a culture of transparency and innovation, because we have to be very transparent with people to mention exactly what's going on. Same time, we have to make innovation for the public sector services. Our colleague talked about digitalization and government service, but also business and societal problem. The third, that even its economic impact is continue, and we didn't see the end. A community have to identify, mobilize, and tap public and private funding source. This is very important for Africa. I would like just to stop 1 second, if you allow me, that we are always thinking about borrowing money from international organization. However, we didn't use a lot of what we call it untapped source of funding. And this is a magic opportunity for Africa to think about our own resources. And last time, we don't know yet what's the scale of the impact, but all what we can do is to use a collaborative way.
Dr. Atef, I'm going to withdraw your stimulus if you don't stop at this time. I think I've given you enough stimulus. Okay, thank you. Very robust presentation. Thank you, Dr. Atef Al-Shabri, who is a consultant to the World Bank and also working with the governments in Egypt. Thank you very much. A very robust outlook and the way to the future for one of the largest economies on the African continent. Yomi Oresawo, who is the CEO at Advantark Advisory, will wrap up the panelists for about 5 minutes. I'm sure he's going to touch on Africa's most populous country, Nigeria. Please go ahead.
Can't hear you.
Yeah, Yami, could you please unmute him, please? Thank you. I think we can hear
Okay,
him now.
I've done the unmute. Can you hear me now? Perfect.
Yes, please.
So, yes, so I was just saying thank you. It's really good to be here. I think we're having a very relevant conversation. There is nothing more anybody would be talking about today other than what we're talking about now and about our favorite continent, our home. So let me just start by just sort of rolling out some of the Nigeria numbers. I think a couple of days ago, the president, Muhammadu Buhari, announced a potential easing of the lockdown in Nigeria come the 4th of May, so that we can start to resume some sort of economic activities. But in the last day or so, Nigeria has just reported about 196 new cases of COVID-19 infections. So far, the total that we have has jumped up to 1,728 as we continue to improve testing. Now, testing hasn't really gotten to where we would like it to be, but we are starting to show some improvements there. So far, we've lost about 51 people, fatalities to COVID. And I suppose maybe the good news there is that we about 307 people have recovered from the disease, and we continue to see more recoveries. But there are some very strange things also happening in Kano, which is beginning to cast a little bit of a shade on me on everything that is going on. But we continue to monitor that and see how that develops, because that is still very unclear at this time. So in general, I think what we've seen is a slow curve with the Nigerian case. We're not seeing the kind of curve that we've seen in other parts of the world, and maybe in some parts of Africa as well. So I think that is giving some kind of optimism for a potential return back to normalcy, but back to the new normal, if you like. But if you then sort of look at everything that's been happening around all of this since Nigeria first detected its first index case in February, the Central Bank of Nigeria, in a bid to come to the rescue and fight this COVID-19 disease, set a target of about 120 billion naira fund to be able to effectively fight COVID. And this money was supposed to be sourced from all over the place, primarily within the private sector. And we saw some early responses from the likes of Aliko Dangote, Mrs. Modupe Alakija, and a few other people, Femi Otedola, who put in ₦1 billion each into that fund. And so far, a lot of that fund has been committed to deploying a lot of infrastructure, like an isolation center and equipment and medicine and palliatives, which will go out to the people. So that is giving the nation a lot of optimism in terms of how we're responding. I think Nigeria is getting a lot of taps on the back by the World Health Organization as well, in terms of the way we've been responding, in terms of the transparency of the data that we are showing. We're starting to see a lot of that. So that generally tends to give everybody the optimism that perhaps maybe we can return back to normalcy within a very short period of time. Now, on the government level, we've seen just like every single one of you have said, we've seen very catastrophic downturn in economic circumstances. Nigeria is currently continuing to do a daily review of the budget and the financing of the budget. Just within the last day or so, the IMF have just approved an emergency fund for Nigeria up to the tune of about $3.4 billion. And then the country continues to go into its treasury as well, just dipping into it and bringing out money and handing it out as palliatives to people. So you have to see that we are taking on a huge amount of debt, and all this debt is just going towards giving people, a cushion, soft landing, some sort of palliative, some sort of easing temporarily. It's not really going into the kind of things that would develop the economy or grow the economy. So as an investor, for me, when I look at the way things are shaping up, it's very worrying. A lot of the businesses in Nigeria and Africa at large are in the informal area, and then a lot of them, they cannot really sustain, especially in this kind of shock that COVID-19 has brought with it, especially in a country where it seems to be we're caught in a double-edged situation. We're hit by the supply side problems, and then we're hit by the demand side issues, especially in the oil sector for commodities. Nigeria simply just is not making any money on oil right now. This cannot continue for a foreseeable future at all. I suppose maybe it's probably the most worrying aspect for Nigeria, a country that has really struggled to diversify the economy away from oil, which has been our main revenue for a very long time. So we continue to look at all of these things and see how it's all shaping up. But as you say, it will be very, very difficult for Nigeria not to slip into another recession, bearing in mind that we were just beginning to emerge from the previous recession. So it looks like we're now slipping back into another recession. But we wait to see what the numbers look like after this quarter and the next one, and then see how that quantitative easing that we're trying to do starts to affect things. Yeah. So,
may I respectfully cut in here where we're pressed for time a little bit, and we have quite a number of participants asking a number of questions of those of you who are panelists. So if you permit me, I think I would just want us to start taking some of these questions, especially in one or two areas that participants would want to see the future for Africa, even as we seek pathways out of the current virus pandemic, a bit of a quagmire, globally speaking. But just before that, let's take a second poll question very quickly, which is the second one. How soon do you think Africa will recover? How soon do you think African economy will recover from the COVID-19 pandemic? That's the second question. And you can see that you can take any of the 5 options. Would it be Q3 2019, Q3 2020? I beg your pardon. That was a typo there from me. My apologies there. Q1 2020, Q2, Q3, or Q1 2021. I don't know if you are voting for the last option there. How soon do you think the African economy will recover from the COVID-19 pandemic? If you just give a few seconds, we want to see how you select what you think will be the appropriate. When do you think, how soon do you think we'll begin to see a turn? Whether that comes as a V-curve or is what you call an escalator kind of recovery for the African economy rather than a V-shape, whichever way you think. How soon do you think we'll be able to recover here on the African continent moving forward from the COVID-19 pandemic? We'd like to see how the panelists and other attendees are voted in the second poll question. Then we'll now take formal questions to our panelists from some of the attendees who have been very nice enough to stand by for the conversation. Thank you very much. Q3 2021, as you can see on your screen, seem to get the highest. So Q3 2021 it's been right. Thank you very much, my producers at the back end for bringing this out very quickly. That's Q3 2021. So let's move on to the questions. Ladies and gentlemen, our panelists, thank you very much. And I think I'm going to start with Papandiaye, you seem to have the most of the questions, so I hope you have your ammunitions left within the time remaining for the webinar to answer some of the questions. But I think I will take the first question around how are we going to take advantage of free trade in Africa? And I'm going to put this straight to Papandiaye, the Secretary General of the AFCFTA at a webinar 2 days ago, says Africa is suspending the July 1st takeoff of the AFCFTA, the Pan-African trade. So the question is, how does this fall into this free trade in Africa, since we're seeing a major disruption and meltdown, if you want to put it that way, in global trade? How does Africa take advantage of its own Pan-African trade within this context? Papandiaye.
Thank you very much. Very interesting question indeed. You know, I think one of the bad repercussion or implication of this crisis is really that it has put on hold many of the good initiatives that the continent had taken in the past few years. The African Continental Free Trade Area was a major one, and is a major one. I don't want to speak of it in the past. We just hope that this is a temporary suspension, and that movement and drive towards more regional integration will restart when the crisis fades, when both the health and the economic effect fade. And it is important. Why? It is important because the intra-regional trade, when you look at the value added that comes, it's much higher than what the region typically trades with the rest of the world. So you have this paradox that when the region trades with European countries and China and the US, it's mostly about commodities, really raw material with very little value added to it. But when countries trade with each other within the region, it's through manufacturing goods and goods of much higher value added. And what this African Continental Free Trade Area promises then is really to increase the value added from trade, to increase the benefits that countries will have will gain from trading with each other, and to place essentially the region within the global supply chain. So suddenly, we move from countries with population of 2 million, 10, 15 million to a regional market that hosts about 1.2 billion people. You're talking about a market of $2.5 trillion US dollars. So it changes. It's a game changer for the region. We were thrilled about the progress that were made before in terms of making it happen, and it would be important that this drive continues after this crisis. It's important for the region medium-term prospects.
Okay, thank you, Papa. Just a question from me. Gaimin, you spoke about the financial markets in Africa, the Eurobonds, the credit, and the financial intervention, what you call financial oxygen for the markets on the African continent. Bloomberg, just about an hour or two ago, put out a report. There's a conversation ongoing between the United Nations and the African Union to put something together like the Brady Plan of 1989 that was done for Latin America, in which we can put something together that will help sovereign states in Africa that are exposed to Eurobonds. About $16 billion of these Eurobonds are coming through this year. Do you think there's a need here to follow up on such a plan or suggestion between the African Union and the United Nations, like as Bloomberg reported it? What are your thoughts? Where do you think African states will find $16 billion in Eurobonds repayment this year? Where is the money?
So, one of the good things that happened before the crisis is the large access that countries had to financial markets. And that has helped many of the countries in the region finance their development needs at a time when development assistance, ODA was coming down relative to the size of these economies. And what we had seen is that, the inflows, capital inflows into the region, when you scale it by the size of the economies, were even larger than what all the emerging markets were getting. And this provided tremendous help for countries to make progress toward their sustainable development goals. Now, the crisis has reduce the revenues that countries were having. Our colleague Yomi mentioned the hit that, for example, that Nigeria was getting on the revenue side. The oil exporters are being hit a lot by the decline in oil prices, on top of what's happening to global demand, and the need for ramping up health spending to deal with this crisis has just put tremendous pressure on fiscal position, and therefore countries need some space to deal with both the humanitarian aspect, the health aspect of this crisis, and also soften the blow on the economic side. Therefore, any help that can be provided to these countries in terms of reducing the burden of the debt service is something that's welcome. As I said earlier, the fund is doing its part. It supports the G20 initiative as well, and the private sector will we also support the G20 call for the private sector to step in. Now, how it will step in depends on various things. The UNECA proposal is just one, because one needs to think carefully about how this is done, so that the implications for countries' access to markets when we get out of this crisis are well understood and contained.
Thank you, Papa. Gami, you have your microphone on. What are your thoughts on Eurobond?
Well, just to add to that, I think it's important to note that there's been a massive outflow of funds from Africa at the moment, and that's one of the reasons why we're seeing a depreciation in most of the currencies, in especially liquid markets, including in particular Nigeria and South Africa. For instance, in Nigeria, majority of the OMO holders, the foreign OMO, the OMO holders and swaps are foreigners, and this has led to massive reversals at the moment. So it's unlikely to see any return of that inflow into such markets, given the heightened uncertainty about this pandemic, and also uncertainty about how the government is handling this particular situation. Yomi has just mentioned that there are now concerns in Kano State, and things like this will always tend to increase concern among investors to say, well, if they cannot handle it properly, then why should I put my money in that particular market? And bear in mind that one of the fundamentals that investors look at is how will I be repaid if this country, if things starts going pear-shaped? And Nigeria has always relied on oil to repay its debts to some extent. So oil prices are now down. Most of the countries in the African region are commodity dependent. Commodity prices are down, apart from gold, which continues to remain elevated thanks to the uncertainty in the global economy. And for that reason, maybe countries like Ghana, which is a major gold producer, South Africa, will welcome, investors might welcome some kind of, get some support in such markets. But I'm afraid that now it's kind of wrong time for any Eurobond to be issued, but perhaps governments can look into the diaspora bond. African diaspora, it's one way to go, where they can tap into that particular entity to see how they can invite the diaspora to help to fund in transactions and trade obligations in their countries.
Thank you, Gami. One of the points that have been raised by some of our participants before this seminar and during this webinar, I beg your pardon, is that there are issues around regulatory processes and governance issues, corruption in a number of African countries. So asking questions, as we've said. So let me just ask Ali Kansacho in Nairobi. Ali, if you're still there with us, what are your thoughts around this? How do you think we can deal with the issue of regulatory expectations, good governance moving forward, billions of dollars in debt forgiveness, debt moratorium, repackaging of sovereign and corporate debt and what have you? So how we ensure good governance, transparency and accountability here for Africa so that we don't come out of this pandemic with a major bubble that has been built up within this period of crisis? 1 minute.
So let me touch on China, Africa, which currently is around, what's visible is about $160 billion of borrowing. And, you know, this is, I'm not picking on it specifically, but I'm just giving you an example. In the case of China, Africa, first of all, the nature of these contracts, bilateral contracts, have been very egregious. They've been hidden from the African citizen under a G2G label, saying this is government to government. And we've seen massive inflation in some of these infrastructure projects. And clearly now, in the post-COVID world, they're not going to be able to make an adequate return on their investment. In a lot of the Eurobond borrowing about which everybody's talking about, that's $104 to $110 billion. Where has that money gone? There has been very little recourse. We were in an environment where investors were just chasing yield, not asking many questions. And really, it's a question as to whether leadership use that money effectively. And I think what COVID is going to tell us is that there was a huge spectrum of use and many countries have been frankly irresponsible. Now we're saying, let's go and bail them out under a quasi-Brady program. It's all very well doing that, but essentially they will not be able to come back to the market for years. So what we're talking about is remedial action. But when you look further out post that remedial moment, what you're looking at is a permanent reduction in credit availability to a lot of our countries. And I think that's what's going to come about. And that's directly a consequence of poor governance, of money being spent inappropriately. A lot of the money was refinanced into winning elections, right? I mean, you did a huge infrastructure project, you lobbed on an extra $500 million and you won the election. And I think when we go and talk to the diaspora, which I find very interesting, we've avoided going to diaspora for a long time. Why? Why have our governments done that? They have not wanted to give them a political voice. And that's been the quid pro quo. Now they will have to go, I hope. And I hope the diaspora will extract a heavy political price and demand around how the money is spent and the transparency around it. So I think, look, we're coming to a very interesting juncture, and it is absolutely reliant on a change in the way we manage our affairs on the continent, because it hasn't been managed well. Let's be frank, we had a lot of money, where did it all go?
Okay, I'll thank you, Ali. From Ali in Nairobi, let's switch to Ali Seger to give us his thoughts. One of our participants is asking, Emmanuel Akander is asking, is it time to review our economic development theories and policy directions? What opportunities exist for sub-Saharan Africa, deeper economic integration? Key question, is it time to review our economic development theories and policy directions, mostly based on Western economies? Ali Seger, what are your thoughts? 1 minute, please.
My thoughts are quite clear. I think that Africa needs to find its own model. It should not copy, you know, a Western model or European model. It should find its own model. The issue today is Africa is not a common market. So you you have a lot of issue, and perhaps this is the way to go forward to create a new business model. Because as of today, you have imports, exports, but they don't create any added value within Africa. You don't have any, we can say, trade, added trade value between African countries. So I think this is the way forward. And it will limit in the future any, we can say, external shock from Asia. It's really sad to see that something happened in Asia with few deaths in Africa has totally collapsed the continent, to be honest.
Okay, thank you, Ali. Dr. Atef, if I'm asking you, maybe for North Africa, for Egypt, what in the business sector, what strategies do you think businesses or body corporates need to employ or deploy moving forward? What sector do you think will be quick to recover from this pandemic? And then what are the expectations that you have in the short to medium term?
Yeah, let's say that a country like Egypt was going very quickly into the global value chains. Since kind of 5 years, Egypt is investing huge in the global value chain and food industry, in IT, ICT, and in transportation, car, automobile industry. And the COVID-19 is really giving a hard time for the global value chain. And we have seen that a lot of industries are developed based on the import of some pieces of their, semi-manufactured pieces. And one of the strategy which we have to, in fact, the most hurted businesses now are the businesses who are making part of a value chain. I mean, big businesses who are producing for the locals are working well. I mean, people who are making food processing for the villages and for the central, for the capital, are still working well. However, the guy who we told him that you have to globalize it and you go for the globalization and make part of the global value chain, was more hurted now due to the fact that there is no trade and no transportation. So the first lesson we have learned from the crisis as a business and corporate, that we have to rethink the business model, as our Ali colleague mentioned, and to think local. So the first measures we have seen that in terms of working from using the raw material and processing it into value-added product. Most of African countries, I have been in 16 African countries. I am a vice president of All Africa Small and Medium Enterprises Association, which is headquartered in Bayelsa, Nigeria. And I have seen every time I go to the African towns, I look for the local production. And we don't have most of processed production. So the first lesson was that. The second, that the government support to business is limited. We can't imagine that the governments will be injecting huge amount of money systematically, and also fiscal measures like dropping, postponing dues and making taxes half or what. So what's going on in the North African, as I joined your question regarding the African Free Trade Agreement, that after the crisis will over, we will be back to not the same model, because as Donald Trump is killing the globalization and all the problem of having protective and protection measures against importing from other countries, now we will be forced to rethink about using our own raw material and making that kind of small thing for the villages and for the town, for the country, for the neighborhood. So one of the lessons which the state is taking into consideration now, that the aggressive way of going for the making part of international value chain was a great, in fact, was a great factor, because we have drained a lot of foreign direct investment. We have excellent, foreign currency reserve in our central banks, but now we don't have the buyer, and we don't have the part of our raw material, which we will be producing. So the third lesson that governments are learning now, that a lot of the revenue coming from the taxes from those kind of globalized, partially localized here, are already cut. So who are paying the taxes now? This is the guy of informal sector who is still working and still producing from his villages.
Dr. Atef, this is good. Thank you very much for continuing to bring in the Egypt perspective. Yomi Ogunsawo, let me ask you. One of our participants is asking this question. in terms of what he thinks that to attract FDI into Africa, do you think, and that's the question from one of the participants, do you think it is time for each African countries to change the local tax laws or legislations in each country to attract FDI as opposed to investors using the IFC and other other agencies outside Africa to bring in foreign direct investment? You are an investor.
Absolutely. I think anything that will attract foreign exchange into Africa should always be encouraged. I think there is always going to be that, particularly now. I think because of what has gone on across Europe and North America, I think even Africans in diaspora now realize that it is now more important to invest more in Africa than in the West, because families are being wiped out, jobs are being wiped out, companies are being wiped out, large organizations and industries are literally being wiped out right now as we speak. So I think there will be that rethink by Africans in diaspora to want to sort of anchor themselves back on the continent. However, in terms of the larger amounts of money, I think, as you said earlier, the postponement of the AFCFTA is a big loss at this time. I think that would have been an initiative that could have maybe helped us build capacity a lot quicker in terms of in areas of manufacturing where you can draw that investment into that. We do a lot of work in that space. I have massive projects that attract that kind of investment, and I work with a few funders that are really keen to come into Africa right now before the pandemic. I've had a series of meetings with them. Their optimism has still not changed. They're still happy to come into Africa, provided that we're doing the right thing. So if we're innovating and we're building the right industries and we're creating the right products and we're putting the right policies in place, then there is no doubt that we will continue to attract that FDI. Absolutely.
Okay, so if I ask one of the questions from attendees is that there's still low number of COVID-19 fatalities in Africa compared to Europe and North America. So should African economies be quick to reopen our economies? How should we go about this? You have any idea for us about how we should go about this, Gavin Noyani? Just about 1 minute.
Well, I think this is the million-dollar question, because even here in the UK, the government's still struggling with that particular question on the exit strategy. It's going to be a trial and error thing. I think it'll be staggered rather than open the economy, fully for normal economic activity to resume. I believe that it will depend a lot on the number of cases per region, per city, per county, and the number of deaths as well. It's unlikely that a country like Nigeria would just resume economic activity in a state like Kano, given the problems that we talked about earlier. So I think once they see the numbers dwindling, we've seen Ghana attempt that recently in Accra and Kumasi, and then suddenly we saw a rise in the number of cases. So it's a difficult thing. It's a dilemma for governments, and I think that it will be more on a staggered basis, and it will be driven by the results from the health sector about the COVID-19 cases.
A quick one as we're trying to wrap up, a quick question. Gami, let me stick with you. There was a talk about force majeure earlier. If this is, folks are concerned about this in the corporate side, whether it's in the whatever sector is going to happen. What are your thoughts if this become the order of the day? How do you think this should be handled within the continent?
It's a difficult one, because I think my colleague mentioned that that is an issue in Egypt as well. I believe that the authorities, the central banks, are trying to discourage people from doing that by trying to support providing credit relief and financing, extending financing for businesses so that they will be well cushioned against this crisis. But at the same time, it's very much likely that business failures are going to rise significantly from the short term, even beyond post-COVID-19. We'll see casualties because of this. So I guess the regulators would have to continue to use some kind of moral suasion to help to support businesses so that we can discourage the private sector from embarking on such a venture.
Okay, to start costing home now, in his presentation, Papandiaye, who did the first presentation, talk about, quote, tremendous resilience of sub-Saharan African economy and people. And I picked that phrase from his presentation. It says, the continent has tremendous resilience. So if I start asking each and every one of you, our panelists, 6 of you, right now, just give me 60 seconds. Where do you think this resilience in African economy is coming from? Will it be the formal sector? Will it be the informal sector? 60 seconds. Yomi Orosanwo, let me start from you. You talk about tremendous resilience. Where is this tremendous resilience in the African economy structure? Formal economy or informal? 60 seconds, please.
Okay. So I think for me, I think the African resilience comes in the people and the micro businesses. We have a huge amount of small businesses that are doing huge volumes of trade on a daily basis, which is what is driving this optimism. People cannot wait to get back onto the streets and just start their daily hustle. And this is what really, really keeps that economy ticking. And this is basically just selling the essential products, consumables, essential services, transportation. So these things will always remain. They will always seem to subsist as people will always need these things. However, when you step into the larger picture, where you then go into infrastructure, when you go into logistics and supply chain or export, then you start to see weaknesses and structural inadequacies. So I think the resilience is in the people. And there's a saying that you don't waste a good pandemic. So I believe that our people will rise up on this occasion again, as they've always done, and we will innovate ourselves out of this the situation that we find ourselves with COVID-19. And hopefully we will be able to rise before the projected second quarter in 2021, like the poll returned a little while ago. Hopefully we'll be able to start posting some positive numbers way ahead of that.
Okay, thank you so much, Yomi. Let me ask Ali Khan Statue in Nairobi. Where do you see the tremendous resilience in the African economies for the future?
I actually agree with what Yomi just said. I think, the most valuable human capital we have on the continent is our people. And I think they're entrepreneurial, I think they're resilient, I think they're intelligent, and I think what we're going to have here is a major reset. And when we do that reset, we've got to really look at how we empower everybody as much as we can. Take our eyes off these enormous big scale infrastructure projects and look at how we stimulate our people, because wherever you go there are markets. Our people know how to trade, they know how to make sensible economic decisions. They've got to make them every day in order to survive. And for me it is about how do we unleash them. They've been trading across borders, they've been trading amongst themselves in really a very difficult environment. And I think that this major reset, which is going to come upon us because the model has to change and it's going to be forced upon us, is about unleashing our most valuable capital. That's our people. That's what I really believe.
Thank you, Ali Khan Statue. Let me ask Ali Seger, where do you see this tremendous resilience on the African continent that will help us build a new frontier after the COVID-19 pandemic?
I will not innovate. I think that Yomi and Ali said everything. It's on the human capital. After, it's true that you know, the SMEs and all these are the most important in Africa. They have, we can say, we have a good network of SMEs and all these. The only issue is that this SME need to scale it a little bit, and for that you need to have some government support to scale it. And I think this is the most important. This is on the SMEs. And after, also how to integrate the informal sector. We can find a lot of, we can say, innovative way to integrate the informal sector. For example, I know that in Europe, a part of the informal sector have been, we can say, integrated to the formal sector through IPOs, in fact. So this is perhaps something that Africa needs to think about it, in fact.
Thank you, Ali Seger. Dr. Atef Al-Shabary, what are your thoughts around the tremendous resilience that we've seen in Africa? And we think this should take us to the next level, the future that is unknown.
Yeah, I feel my colleagues already mentioning the human capital, but I see that Africa has a tremendous history with multiple shocks and multiple crises, and people are coming bouncing back. And one of the most important things we have to mention once we talk about Africa, that this is a young continent. You know, we are not able to compare Africa with Europe. We have, you know, more than 65% of our population is young. So we have two factors, in fact. The first factor, that we have a tremendous ability to bounce back and to you know, to absorb the shock, as African continent is already has multiple cases of crisis and civil war, and that, and people are coming back each time, are coming back and rebuilding. The second, that Africa is a country where we have the raw material, the most rich continent with raw material, and you know, the raw material which we are selling as a commodity without making any value added. So I guess the capital of Africa is its historical, authentic a way of facing the crisis and bouncing back quickly. And the second, that we have a young generation, plenty of opportunity in front of them. I'll just mentioning one number, that, you know, the game industry. I have seen last week a report about the game industry growth in UK, and it shows that kind of 500% of growth within 6 months is due to the people are buying gaming and you know, this video game and IT. And Africa, as in terms of IT, I know a lot of plenty of African small entrepreneurs who are working in IT, and those, they are tremendous undiscovered, untapped source of ideas and people in Africa. We have to travel and to find that. I'm very confident that the future is for Africa, that the ability to absorb, to not panic. We don't see a lot of people panicking in Africa. We are suffering, but we are not panicking. And this is an asset which we are trying to capitalize on it, and we are asking our leaders to capitalize on it.
Thank you. Thank you, Dr. Atef. I'm asking Gaimi Noyane in London, where do you think this tremendous resilience is? If you look at the financial markets, and that's one great area you have very good experience, where do you think the financial markets, the monetary authorities can give us a support in terms of resilience that we need? Do you think we need to be innovative around Islamic finance or Islamic markets, financial markets for Africa?
Yeah, absolutely. Like my colleagues have just mentioned, the people, I mean, a young population is the greatest asset in Africa. So how do we tap into all those talents that we have there? I mean, it will come from both the formal as well as the informal sector. You have a large number of young population, and some of these have very brilliant ideas, but one thing they lack is access to finance. And as much as we've seen some improvements in that area in terms of helping small businesses or sole traders to develop and become more productive in society, it's still not enough. And so that is one area that the authorities, the central banks, the government would need to provide more support through apprentice schemes, large-scale apprentice schemes, whereby, I don't know, competitions, you know, to see who's got the best ideas and who comes up with the most innovative products or the most innovative service. So helping to provide access to finance these operations, I think, will be key, because without that, no matter how innovative the youth population is, or how industrious they are, without access to finance, it's always going to be a barrier to them being resilient and economic development being promoted in the region.
Thank you so much, Gami Nayani. Let me give the final slot to Papa Ndiaye of the African Department at the IMF. You're the one who coined the phrase tremendous resilience on this live webinar today. So how do you see this tremendous resilience moving Africa forward, both formal and informal sectors? Your take, please, Papa.
Thank you, Bosan. I agree with everything that was said by my fellow panelists. I think the strength of the continent and its resilience lies within its people, the population. That's the greatest asset it has. And you know, this is a population that does a lot with very little, and it's done it for a long time. All it needs now is to be given opportunities to do much better and reach its full potential. And you know, strongly believe that it can do that. It has a very young population, and as you know, as far as we can see, you know, if you project towards 2030, 2040, 2050, this is where the labor force will be rising. This is a continent where we will see more workers coming on stream. So for the continent to tap into this demographic dividends, but it needs to do to help the population. It needs to create the jobs that are needed. It needs to set up an enabling environment that helps businesses thrive through you know, a transparent and clear regulatory framework, through good governance, making sure that, you know, people know what the rules are, leveling the playing fields between the various sectors, whether it's state-owned enterprises and private sector, to provide access to finance. I think the Yamin mentioned it. It's critical for businesses to engage into new activity and invest. Digitalization is an area where they need to invest a lot that could help the continent leapfrog many of in several areas. We are seeing like fantastic things happening on that front. You know, in terms of mobile money, for example, the continent is at the frontier, and we have seen how it's being used also to alleviate and help people, population deal with the current crisis. So invest in health education, and invest in these in its people. That's what I think the continent needs. And I would like, before just stopping in a few minutes, I would like to stress the importance of the governance in this response to the COVID-19. You know, there are, as was mentioned earlier, there are billions of dollars being put into the countries, and the international community is mobilizing to help the region face this crisis. And it is paramount that these funds are used in a very transparent manner, and good governance, that the highest standards be adopted. So with that, I would like to thank you very much for today's for inviting me today, and thank my fellow panelists. Thank you.
Thank you, Papa Ndiaye. Hold on, everyone. We're just taking our final poll question very quickly, and that is coming through on your TV screen. And you just have you have to decide this for us. We have just about 4 options. Okay, here we go. How often should we host this kind of webinar? Weekly, every 2 weeks, every month, quarterly? Or would it just have all the panelists and attendees kindly vote on this final quick poll? How often should we host this kind of webinars? I'm sure everyone is enjoying it, and so we thank you very much. How soon do you think we'll come back to you with this kind of webinar? Let's have your vote very quickly on this quick poll. Then I'll be handing over to Agnes Gitao, GBS Africa's managing partner, to give us a 60 seconds wrap and then we'll be signing off on this very live event. Thank you, everyone. How is the poll coming through? Thank you every month. Thank you very much. We have a majority every month. That's the purple. The purple got it every month. Okay, so we'll be back next month, everyone. Okay, let's take out a quick poll and give the floor to, thank you, everyone. Where are you? Of GBS Africa partner. Could you please wrap this for us in 60 seconds?
Super. Thank you very much, Boasim, for taking us through that really, really insightful panel discussion. We really enjoyed. Thank you to all our speakers. I cannot thank you enough. We've gone past the 1 hour we had scheduled to have this conversation. But as I said, it's a baraza, and when there's a baraza, when the elders call a baraza, we have to carry on until we get to a solution. So mine is to thank you and thank all the participants who have been very patient with us. Great insight. I want to confirm that we'll be sharing all the report from this webinar and also the presentation from our speakers. So from me and my team, allow me also to thank incredible partners, Frontier Africa Report and ISFID, who are Islamic finance marketers. Thank you, thank you, thank you. Goodbye now.
Thank you, Agnes. Thank you, everyone, and I'll see you next.
Thank you, everyone.
We should be back next month.
Thank you.
Great.
Have a great evening.
Stay safe.
And goodbye. Thank you. Stay safe. Remember all the rules on whether you're at home, in easing or out of the lockdown. From London, from Washington, from Nairobi, I beg your pardon, and from Dubai. Thank you, Ali. Thank you, Gamin. Thank you, Yomi. Thank you, Ali Khan in Nairobi. Dr. Atef, thank you very much for coming through on the show. Thank you very much, everyone. And Zainab from ISFID, thank you so much. And I'll see you next time. Bye for now, everyone.
All right. Thank you.
Thank you.
Thank you. Great.